And Owen's here now for a look at the day's business news. Hello, Owen. Starting with the Asian markets, they're mostly keeping their heads high.
Yeah, European markets as well, a little bit flat at the opening, Claire. This is the time of year when you're supposed to look through the tea leaves and decide whether this is going to be a bull year or a bearish year. I'm not really going to get into that, but I can tell you that the European markets are a little bit flat this Wednesday morning, but we are officially in a New Year rally, so don't worry too much about that right now. Here's a figure for you as well. The German economy growing by 3% during 2011. In fact, the German economy is so good right now that you have to pay the government for the privilege of lending to them. We'll get into that a little bit later. A few earnings for you as well this Wednesday. Lots of UK retailers, the high street ones, having a very torrid time at the moment. Try telling that to Sainsbury, the UK supermarket chain, which has announced its best Christmas performance ever. Third quarter sales up 7%. Giving a cautious outlook for 2012, though, saying that the conditions will remain challenging, counting on the Olympics and the Queen's Diamond Jubilee to no doubt sell lots of sausages and beer and stuff for barbecues. Let's give you the numbers on the Asian markets. As Claire said, keeping their heads high a little bit. The Nikkei finishing the day around 1/3% up. The Hang Seng has not long closed as well, nearly 1% up. Timothy Geithner, the US Timothy Geithner was in China as well, making some positive noises about relations between those two countries. But investors there a little bit nervous right now about where the Chinese economy is going.
Right, let's move on because there's been a new twist in the Swiss central bank scandal. The resignation of the bank's head, Philipp Hildebrand, was supposed to draw a line under a family affair that led to suspicions of insider trading. But new evidence suggests Hildebrand knew more than he originally said. Siobhan Silk reports.
Switzerland's central bank chief Philipp Hildebrand fell on his sword earlier this week amidst a firestorm surrounding controversial currency trades by his wife. Back in August, Kasia Hildebrand, a former hedge fund trader, bought 400,000 Swiss francs worth of dollars as the US currency dipped to record lows. 3 weeks later, Philipp Hildebrand oversaw steps to cap the rising Swiss franc. His wife was able to resell the dollars at a profit of around 75,000 francs, over 60,000 euros.
I have come to the conclusion that it is not possible to provide conclusive and final evidence that my wife did indeed initiate the foreign exchange transaction on the 15th of August without my knowledge. The fact is, my word is my bond.
But new information has emerged that suggests Hildebrand was aware of his wife's activities. Hildebrand provided some emails to the Swiss National Bank's counsel and to external auditors who investigated the transactions. A mail from Hildebrand to the couple's financial advisor Felix Schäuber appeared to support the former chairman's claim that he was not aware of the dollar purchase until it was completed. But investigators did not see a follow-up email in which Schäuber gave a different version of events. The advisor told Hildebrand he remembered him saying he was happy with his wife's decision to purchase US dollars. After their investigation, auditors cleared Hildebrand of wrongdoing, concluding the transaction was within the bank's rules. But in the wake of the controversy, Swiss lawmakers have told the Swiss National Bank to introduce stricter regulations on financial transactions made by its top executives.
Well, the Swiss government's likely to face some questions about that whole affair when it holds its regular news conference later this Wednesday. We'll, of course, keep you updated with developments from that. For the moment, let's get a bit more of the day's company news for you. Deutsche Börse and NYSE Euronext are trying to save their $9 billion merger by lobbying EU officials. That's according to Reuters sources. The two firms are trying to forge a transatlantic deal that would create the world's largest single stock exchange. The EU competition officials made clear they're likely to block the deal when they meet early next month. It's understood Brussels wants the two firms to downsize parts of their derivatives businesses, a demand they're so far objecting to.
The Indian government has ratified a controversial new law that will open the market further to more direct foreign investment. Under the legislation, single-brand retailers like Starbucks can raise their ownership from a majority stake to full ownership. But the new law won't apply to supermarket chains like Walmart and Carrefour, who sell multiple brands. They'll continue to be confined to a 51% ownership stake with local partners.
And the US Treasury has set a new record in its latest auction of government debt. Investors snapped up $32 billion of three-year bills, with the highest bid-to-cover ratio since data began being publicly available in 1993. The yield was just 0.37%, reinforcing the US economy's status as a safe haven for those investors. Well, if you think that's a safe haven, you should consider this. As I said a little earlier ago, the UK and German investors are now paying their respective governments for the privilege of lending to it. That's right, you pay to lend the government and take on their debts. These are the kind of bond numbers we've been getting over the past few days. You heard there in the US, 0.37% the yield on 3-year bills. Look at this, German 6-month Treasury bills. The yield on that's the interest rate that you get for taking on that debt is minus 0.01%. In the UK, for 35-year government bonds, you get minus 0.11%. So you are effectively paying the government to take on their debts. That's how much of a safe haven these two countries are now.
Moving on now to Apple's iPad launched a revolution in tablet computing that left laptop manufacturers trailing. Even smartphones are now a match for many laptops in terms of processing power. So it seems that the only way for the old-fashioned laptop to survive in the marketplace is to get slimmer and lighter. Our Tech24 editor Rebecca Baring reports from the Consumer Electronics Show in Las Vegas.
The US economy may have lost its thrust, but the electronics sector is powering ahead. And here's a sign. 2,700 exhibitors, 150,000 visitors. CES hasn't been this big in 6 years. The fair's a shop window for an industry that will soon be worth $200 billion. High-tech sales shot up by a recession-proof 8% in 2011.
When it comes to electronics, I think the success of our industry really underscores the degree to which that technology plays a role in our daily life, whether it's for work or for play. It's become integral to our society.
From entertainment to communication and connectivity, CES is a good barometer for the next big thing in tech.
Last year the buzzword was tablets. This year it's all about the Ultrabooks. Look, it has a screen that's only 7mm thick, razor thin, super light, like this Acer version. They can cost you up to $1,000 a piece. Your analysts say that by the end of 2012 they could account for 50% of all laptop sales.
Backed by Intel, big PC makers are showcasing 50 models here.
I think the good thing about Ultrabook is it can kind of act like two devices. So while it has the full functionality of a traditional laptop, some of the newer models will also have a touch and convertibility, so they'll act like a tablet.
Manufacturers hope to give the MacBook Air a run for its money. Its maker Apple hasn't been at CES since 1995, but it still sets the agenda, spawning imitators, accessories, and rumours of a new flat-screen TV. All its rivals can do is race to catch up.
That was Rebecca Baring reporting from Las Vegas. Now, I need to give Rebecca a call and ask her to get us one of these if she can. Take a look at these, Claire. This is called, I love this title, The Board of Awesomeness. It is on display at the Consumer Electronics Show in Las Vegas. It is effectively a giant skateboard, but the company behind this are called Chaotic Moon Labs, whatever that means, have developed this using Xbox Kinetic technology. Basically, pipe that technology into a tablet computer which they strap to the front, and then using motion control technology, you can use your arms essentially to accelerate it, to stop it, basically to power this giant skateboard. I think it's a one-off though. It's pretty much a concept model. I don't think you'll see that going on sale anytime soon, but pretty good fun.
And it's called the Board of Awesomeness.
The Board of Awesomeness, not the awesome board, the Board of Awesomeness.
It's very impressive, and our producer's saying he thinks so too. Thanks very much for that look at the day's business news, Owen. That's it for this half hour live from Paris. Do stay tuned. We'll have all the latest headlines for you coming up in just a few minutes.